BlackRock, the world's largest asset manager, has become a focal point of various conspiracies that intrigue and alarm both investors and the general public. With trillions of dollars in assets under management, the company wields significant influence over global markets, leading to speculation about its role in shaping economic policies and corporate governance. From allegations of shadowy dealings with governments to concerns about its impact on environmental sustainability, the narratives surrounding BlackRock are as complex as they are compelling. As we delve into the conspiracies you might not know, we uncover the layers of mystery and speculation that surround this financial giant and its far-reaching implications in today's world. The foundation. What BlackRock does and how it operates. The asset management business is at the heart of BlackRock. It is not the owner of the $10.6 trillion that it manages. Rather, it is the manager of the money that belongs to its clients, who include pension funds, insurance companies, university endowments, and private investors. It is the responsibility of the corporation to distribute these funds in order to generate returns. In contrast, BlackRock is distinguished by the manner in which it makes investments. The funds managed by BlackRock purchase shares throughout the whole market and keep them for an indeterminate period of time, in contrast to active investors who buy and sell shares on a regular basis. This strategy reduces the costs of transactions while simultaneously reflecting the performance of the market as a whole. In addition to this, it provides BlackRock with a new and distinct form of authority, which academics and economics refer to as universal ownership. BlackRock is able to exert influence over business practices across a wide range of industries as a result of its ownership stakes in nearly all of the major publicly traded financial institutions. BlackRock's reach. Universal ownership in action. To get a sense of the scope of BlackRock's influence, consider the fact that the business has stakes in 95% of the companies that make up the Fortune 500. BlackRock's stakes in certain companies are relatively low, ranging from 3% to 10% of the total. In spite of this, these interests are frequently sufficient to cause it to become one of the major stockholders. As an illustration, BlackRock owns 16% of Amazon, which is a sizable amount higher than the 9% that Jeff Bezos owns. BlackRock is one of the big three asset managers, which are Vanguard and State Street. These three asset managers typically hold between 20 and 25% of a company's shares. There are significant repercussions associated with this concentration of ownership. BlackRock has voting rights that are proportional to the amount of shares it owns, which allows it to exert influence over decisions like mergers, executive salaries, and board elections. Throughout the course of corporate governance, shareholders have always played an active role. But in recent years, this power has been increasingly consolidated in the hands of asset managers such as BlackRock. The voting dilemma. Who really has power? Ownership in corporate America isn't as straightforward as it seems. While many Americans contribute to BlackRock's assets indirectly through pensions, 401k plans, or insurance policies, they have little to no say in how their money is managed. When pension funds or institutions invest through BlackRock, they transfer voting rights to the asset manager. This system stems from a broader shift in corporate governance that began in the 1980s. During this period, executives' compensation packages became heavily tied to stock performance, incentivizing them to prioritize shareholder returns. This alignment has led to decades of wage stagnation for workers, as companies redirect profits to shareholders rather than reinvesting in their workforce or operations. The uneven distribution of wealth. BlackRock's role in concentrating wealth is part of a larger systemic trend. In 1945, households owned 94% of the stock market. Today, that figure has dropped to 40%, and much of this ownership is concentrated among the wealthiest. The top 10% of Americans hold 86% of corporate equity and mutual fund shares, while the bottom half of the population owns almost nothing. Proponents of the current system argue that widespread investment in index funds benefits everyone, as many Americans' retirement savings are tied to corporate performance. However, this claim ignores the stark reality. Most Americans have little or no exposure to the stock market, while the wealthiest 1% own over half of all stocks. This disparity underscores how BlackRock's strategies primarily benefit the elite, often to the detriment of ordinary workers and consumers. BlackRock's political power. BlackRock's influence isn't limited to the corporate world. It extends deep into government and policymaking. The company has hired dozens of former regulators, central bankers, and government officials, creating a revolving door between public institutions and private wealth. Larry Fink, BlackRock's CEO, has personally sought roles in U.S. economic policymaking, including a bid to become Treasury Secretary under Hillary Clinton. In 2014, the Financial Stability Oversight Council, FSOC, identified BlackRock as a potential systemic risk to the global economy. If the company were to fail, its collapse could trigger widespread financial instability. Yet BlackRock successfully lobbied against stricter oversight, doubling its political spending and running targeted campaigns in Washington, D.C. The bigger picture. BlackRock's dominance highlights the fragility and inequities of modern capitalism. While it doesn't own everything, its control over vast swathes of the global economy gives it an outsized role in shaping corporate behavior, market trends, and even government policies. BlackRock's story isn't just about one company's rise to dominance. It's a reflection of a global financial system that prioritizes profits over people, stability over competition, and shareholders over workers. Understanding this system is the first step toward building one that works for everyone, not just the wealthiest few. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.